Good morning, and thank you for taking the time to be here today. Fresh Squeezed is a quick jump start on doing the things with your money and a few quick tips on how to get started. Today's theme is open enrollment for employer benefits. So it might be a little bit more lengthy today than our typical video, but there's a lot of ground to cover. My name is Kelly Reddy-Heffner, and I am very happy that you are here. Fall is typically the time of year when employers distribute open enrollment packets for employees to review and select benefits for the upcoming year. Today we're going to review some of those key considerations. First item, health insurance. Typically a top priority for individuals and families. I have seen in my experience this can kind of go in one of two directions. Typically you either have very limited options or you have so many options that it creates a little bit of chaos and confusion. So either way, whichever end of the spectrum you fall, we're gonna focus on just a couple top high level things to think about. So usually either way, you are considering whether you want a more traditional PPO type of plan or a high deductible health plan. So that's really one of the big decision points. What's your comfort with the pricing and coverage of those two different types of plans? I recommend making a quick table, and I'll provide you with an example of one at the end of the video in our slide deck. My quick table includes what is your out-of-pocket cost each pay, what's the deductible for the plan, your co-pays for typical things that you need throughout the year, medical visits, pharmacy costs. What is the out-of-pocket maximum? It's always good to know what's the most you might pay in a worst case event. I also like to take a look at the worst case event scenario. Sometimes that's included in the packet. Other times you do need to read through and see, like if you did have a hospitalization, broken bone, surgery, what does the cost look like then? And of course, does your provider, your preferred provider, accept the type of insurance that you are considering? If you do select a high deductible health plan, usually you have the option to contribute to a health savings account, an HSA. The HSA contribution limits for 2025 are $4,300 for self-only coverage and $8,550 for family coverage. Those 55 and older can contribute an additional $1,000 as a catch-up contribution. If your employer contributes to your HSA on your behalf, and I would check that out and add that to the table as a comparison, you can contribute the difference to get to the maximum for the year. An HSA is not use or lose. You can contribute any amount, but I like to point out, have an awareness of your deductible. Sometimes that can be a guide and a floor to contributing an amount to the HSA. But again, not use or lose. If you don't need the money towards healthcare for the year, the HSA works as a savings account similar to a Roth IRA if you follow the rules for qualified expenses. If you do select the high deductible health plan with a health savings account, some employers also offer a limited use FSA. This is going to work more like a typical FSA account where it is use or lose, so you want to calculate out what you might need for dental and vision expenses for the year, and also just know any rules about rollover amounts. And that's a nice complement to your HSA and can help with your savings. If you choose a more traditional PPO plan, then you likely have a flex spending account that you can contribute pre-tax dollars to. Similar to the HSA, which was also pre-tax, the FSA though is use or lose. So you do want to know how much you're going to spend in the time period that you have to spend it. So typically it's either going to be the fiscal year or the calendar year that you have to use it. So know those details. The amount this year is a maximum of $3,200, and this year I mean 2025. And the rollover amount has increased to $640, but this can vary from employer to employer. Dental and vision. So know your needs. Basic coverage can be reasonable. If you know you wear glasses or have a more complex dental need, then know the difference in coverage if your employer offers basic and a more advanced option. Often with dental coverage, it's the orthodontics. That's the difference between your basic and an upgrade. So the dependent care FSA, not to be confused with the healthcare related FSA, is a dependent care flex spending account. So for 2025, the contribution amount maximum is still $5,000, same as 2024. And this limit applies to both individuals if married filing jointly. Married filing separately, the annual limit is $2,500 per person. Again, I would calculate out what you might need for the year. Typically it's used for childcare expenses. If you are well into childcare, you might have an awareness that $5,000 is typically nowhere near the amount that you're going to spend on childcare in the year. If you are adding a new addition to your family in 2025, then you do want to calculate it out, because if you take leave, if you split the leave with a partner, you may not have a full year of childcare, and it's good to calculate it out and see what you're going to need, because this is a use or lose option as well. Moving on to disability, the gold standard for long-term disability coverage is typically your own policy, but disability coverage can be quite reasonable through your employer. So check for own occupation, coverage of 60% of income, a reasonable elimination period. That's the amount of time until your first check might arrive if you have filed a claim for disability with your employer. Often the elimination period will connect to the time frame for a short-term disability policy coverage, but make sure of that. For short-term disability coverage, if you have the resources to buy the policy, sometimes they're provided at no cost. Do check into it. Make sure you know if the short-term disability has any connection to family medical leave. That's an important thing to know about. The alternative to buying a short-term disability policy is having a very robust emergency fund. But again, know the fine print on the short-term disability. And we do recommend long-term for sure. Life insurance coverage, again, the gold standard is your own policy. When you have identified a need for life insurance above the basic amount provider, typically an employer's benefit stops when employment stops. So if you've identified a need for life insurance, you don't want the coverage to stop if you stop working at the employer. So if you have a need, make sure you get a quote from an outside private source and then compare that to what your employer offers. Typically your basic coverage is no cost, so you want to take that. ADD and critical illness, these are typically personal preference, and if you feel like you have an above average risk for one of these events to happen. But again, they typically have limited coverage for very specific health reasons. One of the D's in AD&D is dismemberment, so that's one of the coverages. Employer-sponsored retirement plans and their matches. So know if your employer offers a match and know what you have to contribute to be able to receive the match. If you can afford to do so, attempting to do a contribution to get that match can be very helpful with getting retirement savings going. Some employers now have programs for student loan borrowers to provide the match even if complementary contributions are not made by the employee due to having student loans and being in student loan repayment. So check it out and ask the questions. PTO. Most people know their PTO policy and sick policy very well, but if you don't, make sure that you do inquire and know what it is. Also, make sure you know what your medical leave, maternity, paternity cases and policies are in case they might ever apply to you. Things get a bit more complicated here, so it's good to know what those might entail. In terms of other potential perks, some employers offer things like commuter discounts or reimbursements. if you use public transportation or need to have a specific parking situation. So check that out. Other employers might offer things like student loan repayment, tuition reimbursement. So make sure to know what those programs are. Sometimes it's even a continuing education program. Those could be very advantageous for your learning goals. Today's Fresh Slice is know your employer's benefits and optimize selections to add money to your wallet, both in actual benefits and coverage and also potential tax savings. So thanks so much for being with us. Check out the slide if you have additional questions, and I hope you have a wonderful rest of the week.